So great. I guess we'll get started, and I just want to say welcome everyone to Business Unusual. I'm Joe Campolo, and I have my co-host here, Peter Klein. So why
Morning.
business unusual, right? These are not usual times at all. So business unusual seemed like an appropriate sort of title to give this webinar series. Our hope is to have these every week at this time to help businesses, business owners, and folks navigate through these really weird and uncertain times. Why us? What do we really know? Well, not we're not any more qualified than anybody else out there, I guess. Although I do think we have some unique experiences. Peter and I are both Stony Brook guys, so that make us really tried and true Long Islanders. We've known each other for more than 20 years. And I think we both try and view things on a macro level, look at the big picture and figure out how to work, backwards, and how to really start thinking about where this is going in a smart way. We both need businesses, as everybody else does, to survive and to thrive in the future, to hold the Long Island economy together, to hold our own businesses together. So to whatever extent we can offer insight or resources or answer questions that folks in the business community have, we're happy to do it. Going forward, we're going to have other experts join us for questions as well, folks from other industries that are doing really cool and innovative things, and we're going to talk to them about how they're making sure their businesses and employees are safe and thriving in this time. So what are we not? We're not political at all. We're not here to discuss politics or comment on anything that's going on in the political world. We do want to talk about policy issues that are out there and how they are impacted, and maybe some changes or improvements that can be made to policy issues. But we're not stock pickers. We're not going to talk about stocks, and Peter's not going to comment on individual stocks, although we will talk about the market and industries and trends that are going on out there, because I think it's really important that people have an understanding as to what the markets look like and what they're about. And so that's what we're hoping to accomplish. This will really, take form as we continue on through the weeks and through the months. And Peter, you want to give your opening thoughts as well?
Sure. I'm excited to be here. Thank you for your leadership on this initiative, Joe, and your team. I first want to make sure everybody is safe and healthy and staying that way. I do believe this is the test of our generation, and I still very much believe in American exceptionalism, and I believe that we will show the world what it is to be an American. But it'll take some time. It is not something that happens overnight. I believe there's a pathway, but one that has to be littered with sacrifice, and therefore we just can't just jump back into our lives as normal. I want to just make sure I thank all the healthcare workers and frontline folks on Long Island especially, but of course all over the country and the world. These are the true heroes. We're just in our homes, in our offices, trying to give you some information, but these are the folks that are putting their lives on the line. So I'm, again, happy to be here, looking forward to bringing some information to the forefront and answer any questions. And thanks very much for allowing me to be here.
It's great. And I specifically wanted Peter to co-host this with me because he is very, very familiar with the markets, macroeconomic issues. He's a best-selling author on securities analysis, and he also runs a charitable foundation. And one of the things that we're going to get into later on as this continues to progress is the importance of the not-for-profit charities, especially here on Long Island, and the challenges they're going to be facing and what society would look like without them. And that's going to be an important piece of this going forward as well. So, I like to start talking to business folks with a dose of reality. And some people, get upset with me, but I don't feel like we can start to solve problems. I don't feel like we can start to understand, what and where our business needs to grow and pivot and go to unless we all understand sort of what the economy is going to look like between now and the end of the year, right? And so there are certain facts that we need to discuss and understand as a level set, right? And they're uncomfortable. And I get they're uncomfortable to hear, I get they're uncomfortable to talk about, but I think as business leaders, we have to understand. So when the shutdown, and it was March 16th when I had the first discussion, with our team here at CMM about cuts that were going to need to be made and drastic changes that were going to be happening. But when March 16th happened, and basically the American economy was shut down, there were a series of events that happened and that are going to continue to happen that we must understand and accept from an economic perspective. So once the economy shut down, we knew that unemployment was going to skyrocket. And at the latest count, unemployment, there's about almost 35 million people unemployed at this point, which is just about 20% unemployment, which is the highest we've seen since the Great Depression. To put that in context for people, in the month of April, we lost, more than 20 million jobs, more than 20 million people. And the next closest month to that since the Great Depression was February 2009, when 835,000 jobs were lost. And we thought the world was ending when 835,000 jobs were lost in a single month. And now we've lost 20.5 million jobs.
Those are the same jobs, Joe. Excuse me. Those are the same jobs that we grew over the last 7 years.
Exactly right.
Reset.
7 years of growth wiped out in 1 month.
Done.
That's how catastrophic that that was. There was a study on CNBC this morning that now says that 1/3 of the small businesses that shut down in the last 60 days are not going to reopen. 1/3 of them are not going to reopen, which is, again, another fact that we have to deal with, as uncomfortable as it is.
Joe, can we just pause there for a second? Because
Yep.
I think there are some interesting knock-on impact. I know we'll get into it, but just think about it. 1/3 of the small businesses don't reopen. So those are 1/3 of those businesses that have employees that are not going to be at work. We've got those landlords who are not going to get paid that rent.
Yep.
We've got those suppliers are not going to be supplying that particular particular businesses. So they're impacted. Their employees are impacted. And then you have less sales taxes, less property taxes. So what's going to happen? They're going to have higher taxes elsewhere to make up for that.
Yep.
So a lot of knock-on impact.
Right, and that's kind of where this whole thing is headed, right? So the Fed is added about $7 trillion to their balance sheet, which is catastrophic. The national debt, once the stimulus packages are all going to be passed, the national debt will be almost $30 trillion. GDP is going to be down 30%. So, in this country, if we have a net gain of 3% in a quarter for GDP, we do the happy dance. We're going to be down 30%. The travel industry is decimated in terms of airline travel. The Long Island Railroad and the MTA, they're getting hit tremendously right now. Hospitality with hotels, restaurants, Broadway. We know those are going to be severely impacted and may never recover. I mean, for a restaurant to say that they have to operate at 25% capacity when they couldn't even make it at 100% capacity, we don't know where that's headed. Education, so education, and not just public education, but private education, private universities. My daughter just graduated from Fordham on Saturday. We sat around the TV and watched the recorded graduation ceremony. But I have to tell you that if she had gotten accepted into a private university and it was only going to be distance learning, I don't know that I would have spent the money for that. So we have to be mindful of that. And then, Peter, just like you were saying, so all of this is going to mean commercial real estate is going to be incredibly challenged because there's going to be less rents coming in. So what that means is, at least during this recovery period and between now and the end of the year, we're all faced with higher prices for everything. So if restaurants are going to have reduced capacity, but still have to pay the same salaries and everything else, prices are going to be going up. Interest rate, taxes to pay the debt, and all this is going to impact the market in a way that we just have no idea, because we've never seen it before, and we don't really know how the recovery is going to occur, right? So to me, as I see it in my world, those are the dominoes that are going to fall between now and the end of the year. What are your thoughts about that, Peter?
Joe, you laid out a very interesting litany of concerns and worries, and none of them are far-fetched. I mean, they're right in the zone of reality, the new reality that we're living in. But what I'm taking back on is the fact that despite all what you've said, markets are up. Markets are up from the bottoms of that 17th of March or the week after. And you ask yourself, at least I do from my lens as a capital, allocator of other people's capital, a steward, a fiduciary, someone whose job it is to take care of people's capital and their nest eggs and their dreams and their college for their kids. You ask yourself, what do you do? I mean, so, why has this market jumped? The stock market has jumped. Well, there's a couple of reasons, right? Is that you mentioned the flood of stimulus, of capital coming in. The Fed almost, they said they're buying not only bonds, corporate bonds, even junk bonds. Never been done before. Japan purchased equities about 10, 12 years ago to spark their economy. We might be going down that, who knows, if we have a situation like that. That's very inorganic. When you have a buyer out there, the biggest checkbook ever, who says, I got it, I'm backstopping you, that's not really good price discovery, because you have an inorganic or artificial buyer of securities there propping it up. So your stimulus is number one. Number two is animal spirits. Market starts going up, people get back on that train again, and that can get that can be a problem, because what goes up can often come down, especially when it's not there's no substantive value to a lot of these numbers. The only good thing I'll say is that the market is not Main Street, right? I mean, in the sense that some of the companies that we're seeing as being the biggest companies on the stock market are technology companies, and not the kind of companies you would see in USA, Main Street USA. So that's the only pushback, is that the market is a bit of a changed animal, if you will, from what Main Street USA is in 1950s. 1950s, there was a direct correlation between, Mr. Jones on Main Street's hardware store and the market. There was a higher correlation between them. Today, that's been changed a little bit. And then the last thing I'll say is, besides the animal spirits and the stimulus and this notion that there's no other alternative but stocks, I think that investors need to be wary of the risks, because when you have valuations so stretched, things can get dicey very quickly.
Yeah, and so, talking about the macro issues, that everybody wants to know, so what do I do, right? How do I handle it? And I can tell everybody from a business perspective, and I'll give you, we started right when this launched, we started a COVID hotline where people can call or email their questions or their concerns, and it's really been 24/7. By 365 for us. We've had hundreds and hundreds of people that have reached out to us. And so my days are spent sort of talking people off the ledge and giving them, some strategies to move forward. And it's the old adage, and right now cash is king, right? Cash is king for a lot of reasons. The PPP program came out, and hopefully everybody that can qualify has been able to get those fundings. And that'll give you 2 months. That'll give you 2 months worth of. And I say to everybody, it's like being on a deserted island with very little food and water, and a life raft shows up, and you get 2 months worth of food and water on the island. And that's what PPP was designed to give us. And that's great. We still don't know when the rescue ship is coming. We still don't know, especially here in New York and on Long Island. There's a lot of frustration about when we're going to really open up and relaunch. We don't know. And so we're going to have to stretch those dollars for as long as possible. Now, last time I was talking, to a business community, there had been no progress by Treasury or the SBA on extending that 8-week period from June 30th on PPP. But Secretary Mnuchin and the SBA have both come out and said that they're exploring stretching out the June 30th date to spend PPP dollars. And all I can say to people is you have to be very realistic right now and very careful with cash. Just because there's talks about certain sectors in the economy reopening, we do not anticipate there's going to be a flood of revenue coming into any business at this point. It's very difficult. And so cash is king, not just for your personal household. And I told everybody right in the beginning, take everything off auto pay, be very conservative about what you're paying, be very conservative about how you're paying it. You need to control all your money. You can't have these credit card companies and bill collectors sweeping money out of your account. You have to be very careful. It's the same way with your business right now. And so we had to be very realistic and very practical that as much as people love their lawyers, they're not going to be high on the priority list of paying them right away because they got other things they got to do to pay their businesses. So reality and practicality is cash is king right now until we see where this thing breaks, especially if there's going to be a resurgence in the summer.
Right. So spot on, Joe, and such a prudent steward of your clients, because that's the right message to give. Yet in the market, the cash has been trash. If you look at the last 2 months, last month and a half, it's all been up, and those stewards like myself who are concerned about their clients and have been keeping cash on the side have been underperforming because they've missed on that huge increase. But see, that's the point. My lens as a wealth manager is not the lens of a casino operator or a hedge fund guy who's just out there looking to make as much money and take on a lot of risk. I have to deal with Mr. and Mrs. Jones. I have to deal with their nest egg and the issues that surround their family, and make sure that they're comfortable and they're worried and they're concerned, they're scared. And here I come in there and I'm saying, we've got optionality. We've got cash on the side. We've got your portfolio well balanced and well managed. It's doing fine. You're not going to be the hot dot, but you're moving higher because the market is, but you've got a safety valve. That's the key, a cushion. And that's how you invest. And, just like you're suggesting to your clients, I'm doing the same thing to mine.
So what is your view on debt, Peter, right? So a lot of people are wondering, should I be, because the market is so volatile right now, should I be selling off securities that I have so that I can protect my cash and my household cash, or should I be drawing off that low interest home equity line of credit that I have right now, and keeping my money in securities? That's a very common question that I get, and I'm just curious what your take is on that.
Yeah, I see. It sort of depends on the balance. It depends on where if it's capital that's allocated for retirement, obviously that's different than near-term capital, depending upon the amount of leverage you have and the debt you have. So it really is, it's not one size fits all kind of. It really depends upon getting into the weeds a little bit and figuring out what the family's situation is. But from my view is I'm not a big fan of excess leverage. I think if you look back in history, that's been the killer of all of all the brilliant investors that were once brilliant that realized they were more like hubris than brilliance. But debt can kill and it could hurt. And now I know rates are very low, and I know that's very attractive because you could say, hey, interest rates are so very low. Just be careful. You've got to look at what the downside is. So it's not so easy to simply say, pay off all the debt. Maybe depends. What's the rate? How much of it is it? What do you have invested? What kind of investments do you have? If you have very speculative investments, yeah, I would change that a bit. I would not want to be speculative in here.
Yeah, the same questions always come up now with lines of credit and businesses, right? And so, there's this very difficult situation that businesses are finding themselves in. They have the PPP, but the PPP money is going to run out, very quickly. And they're trying to protect cash. And so they have their commercial lines of credit, right? And so the way I see it, at least the way I see it, is I don't really see any sort of economic recovery in any substantial way until the earliest of September. And to me, that really begs the question if there's going to be a resurgence of COVID over the summer. And there's a risk of that. We'll have health experts on in future episodes, but there's a risk of that. And the conversations that I've been having is because of the pent up frustration and aggravation people are feeling from being locked down for 2 months. Even these relaxed openings of the beaches and everything else are going to cause people to act irresponsibly, and that's naturally going to increase the numbers, and the media will fan those flames, and that could very much cause our economic bounce to, instead of becoming a U or a V, to becoming a W. And a W would be a very difficult situation. What are your thoughts on that?
Well, first off, my friends over at Cold Spring Harbor Lab and Northwell, again, I give them as many accolades as possible for all their efforts and their hard work. From what I've known from speaking with them and being on various webinars, is that these types of diseases, these coronaviruses, they do tend to mutate. So lest we think that this is just going to go away by some magic, I think that's off the table. The bigger concern I have is a mutated virus that resurges, and then of course the problem, then there is, if it's mutated, then what? How are you going to, now you got to get new treatments, and the antibodies may not be as powerful against a mutated. So I worry about that. But your question was more focused on the business side of it. Is that correct? I've forgotten. I'm sorry.
Yeah, we were talking just about utilizing lines of credit and how important.
Right.
So if PPP is going to get a business through the next few months, right? But you just do the math. So the math is there's no business going on right now. All right. If people are going to start doing business again June, July-ish, so just in my business alone, June, July-ish, maybe, even that is going to beg the question of when are people going to be able to pay? When are people going to be able to pay past due vendors? When are people going to be able to pay for current inventory? When are they going to be able to, restaurants, how are they going to pay for the linens to be washed and all this other stuff? So now you have to rely on debt, meaning lines of credit or personal loans to the businesses to be able to keep things moving forward. And based on the market, how much tolerance of risk are people going to have to go even further in debt?
And not only that, you got to take a hard look, an unemotional hard look, and this is where advisors could come into play as a helper to a small business person. Take a look at your business. If I do this, will it come back? What's the likelihood that it'll be not coming back? Maybe you're throwing good money after bad. So looking at that business, doing a real deep dive with your advisors on looking at the sustainability. And again, let's think we may have to change it, right? There may be a pivot. You may have to go from doing business this way for the last 10 years to doing it a different way in the new world. So I think that will determine the amount of financial risk you can take, ergo the amount of debt you can take, and comparing that to your liquidity is going to be the key metric to look at. You never want to put yourself in a position, and Joe, you know this, you said it earlier, you never want to put yourself in a position where you're too leveraged and now you have, you're hoping for, cash flow to come in. That's not a good place to be. So
yeah, and that's what I've been telling. So what I've been telling clients is, every single business right now is a startup. It's a startup.
Yeah.
Okay. We shut down and we're a startup. And you have to look at the current climate. You have to look at the future market conditions. You have to look at everything and say, will my business model work in this new economy? And you have to have a hard conversation with yourself as to whether or not you think your business model is going to work in the new economy, especially with all these challenges, because otherwise we will just be throwing hundreds of thousands of dollars at something that just isn't going to work anymore. And those are very difficult conversations for people to have, but we have to accept reality in order to make those decisions, or we are going to waste so much capital moving forward. And that's what I'm truly nervous about, is people are going to say, well, it's opened up. It always has worked in the past, so I'm just going to keep moving forward. And there's sort of a tone deafness on social media to that extent right now, that people think it's just going to happen. I don't see it that way. I think we all have to reimagine our business moving forward and make careful decisions about how much capital we're going to invest and how much risk we're going to take with our business model.
Joe, I think it's not a light switch, but a glider, a dimmer switch.
Yeah.
You brighten over time. And I think that's the way to look at this. You don't go back and say, July 1st, okay, ready to go, light switch on. Maybe you begin to move that slide to a brighter light over time, and then slowly implement your business portfolio and your business paradigm. But yeah, there's a lot to be considered out there, and the pivot is really a key issue. And I think that's where your team and my team can help individual small business owners, etc., try to figure out unemotionally, where their pivot might be. And it might be something that can be they may look back on this and say, thank goodness I pivoted, and now my business is even more sustainable. So you never know.
Right. So just to remind all of our viewers, nothing we say should be interpreted as an encouragement to invest or divest or anything with anything. We're just two guys.
Full disclosure.
Yeah, we're just two guys giving our cocktail opinions here. But I will tell you, and I think, Peter, we talked about it, and I think it's interesting for our viewers to understand. So Warren Buffett, the greatest investor of all times over the last 2 weeks, fully divested himself of airlines, right? He fully got out of airlines. And what I think is remarkable for people to understand is, Warren Buffett made his bones as a value investor who bought things that were severely undervalued, right, and held on to them for a very, very long time. But what I think is telling is he not only sold everything in the airlines, but he bought nothing. He bought absolutely nothing, zip. And that speaks volumes. What are your thoughts about that?
That was really a surprise, and the fact that the market didn't react to it was even a greater surprise in my view. This notion that Warren Buffett is past his prime or has lost his edge, I think is completely misplaced. Value investing is a science. It has to do with math, and it's unemotional. And and because he's looking at the numbers, he's pausing. Now, interesting to note, before COVID, Berkshire had a lot of cash in it. So it was just, he added more cash. It wasn't like he had a little cash and added. He had a good chunk of cash going into this, which is part of my thinking that, the debt issues that you mentioned earlier, the valuation issues I've written about, they were with us pre-COVID. These got a lot worse during COVID. That's the problem. And I think Buffett is really is an interesting signpost to this environment. And he's pretty much saying, I have no idea. He said that. I have no idea what's going to happen, but I do know things are going to be very different. And I'm sure he'll find his opportunities, but they will be at a very deep discount. That's what he does. He buys them when they're unloved and when they're hated, and it's blood on the streets. That's when Buffett comes in. And apparently, he doesn't think there's enough blood out there yet.
Yeah. So industry-wide, right? So we've seen a lot of ups and downs. The airline industry in particular has been, and as we're talking right now, I'm looking out window at MacArthur Airport, and I have not seen the Southwest or the Frontier airplanes taking off like they used to, and I doubt I'll see them for quite some time. But I mean, what industries, Peter, do you think?
Yeah.
That there may be opportunities in? Where do you think there could be surges in growth?
Sure. So my team and I spent a lot of time since early March in trying to determine, how to win for our clients, right? That was our goal. We felt like we came into this with a bit of a head start, given the fact that we were defensively postured in January and late last year, raising some cash, not really having a lot of risk on our portfolios, not because we thought a pandemic would occur. No, we did just see a lack of appreciation for risk, and we saw a lot of complacency, and we felt that things were stretched on valuation, debt, et cetera, et cetera, et cetera. So we feel we had a head start. So now, how to win? And what we've told our clients is that cash that we have on the sidelines is there for not only to buffer your decline, of course, but also to serve as a defensive optionality. In other words, putting capital to work when there are opportunities to do so. And we call those big down days. Where we're not investing capital is in the industries whereby you have travel or you have airlines. We spoke about cruise lines, those sort of leisure companies and industries we're not investing in. That was just too risky. Hotels, etc. We felt like those have systemic issues, and we felt like those have particular risks that are not going to go away overnight. And so we felt that those were too risky for our clients. Remember, we got to be sensitive to risk. Where we are finding opportunities, I know there was a question on this, we are finding opportunities in areas dealing with sanitizing, clean, anything to do with clean air, clean water, sanitizing, any of those are very strong in our view. We also like cybersecurity and defense industry. Think about it, Joe. You probably know this. Our enemies are frothing at the mouth right now, seeing the United States in a vulnerable position. God forbid. So we need to keep up our defense, cybersecurity being the most important of that, and that's critical right now. So I think that's an area. I love infrastructure, the 5G build out, healthcare, gold. Those are the areas I think are exciting right now.
Yeah, I would think also, just based on, especially here in New York, ed tech is going to be an important part of the future. I mean,
yep.
The schools are in a very precarious position right now. There's going to be massive cuts, and there's the 2% tax cap that's in effect here in New York, right? So schools can only raise their budgets by 2% each year, and that limits how much tax revenue can be allocated towards the schools. Yet they're going to be decimated. They're going to be decimated in terms of financials. And so I think ed tech and reimagining, the governor likes to talk about reimagining education. I think ed tech's going to be an important part. I don't know what they're going to do with all the brick and mortar buildings they have.
Yep.
I don't know what they're going to do with all the teachers, the gym teachers, and the like. We're going to have to see how that goes. But certainly these educational technology as well as healthcare technology is going to be an important part of our recovery moving forward.
And that will not work without having a viable, Wi-Fi 4G kind of infrastructure. So that's why I think you're right. And I've been looking at that ed tech sector. There's some interesting companies there that I'm analyzing. But I also like the sort of picks and the axes, if you will, the actual infrastructure on the ground and in the air that fuel that growth in technology interfacing.
Yeah, so the other hat I wear proudly is chair of the Hauppauge Industrial Association, right? And one of the issues that constantly comes up now is, what is the tax bill going to look like on Long Island when all is said and done? And these increased taxes are going to be a big challenge, not just for businesses, but for homeowners. And that, that's really something that we're going to have to perhaps get some of our elected officials on here to have some straight talk with us, because that's what we're about. We need reality right now. We don't need pie in the sky. We need reality. We need facts. And this way, we as business people, everybody has says to me, give me some good news. And the good news I can tell you is, more than anything, I think the greatest asset our country has is our entrepreneur spirit, right? We will figure out as business people how to solve the problem if we have the accurate facts. We'll figure it out. I mean, nowhere more is that evident than what we've seen during this pandemic. Politics aside, we first knew we needed enhanced PPE, and the business community responded and got our healthcare workers the PPE they needed. We then knew we needed ventilators, and the business community responded and got people ventilators. We're now on to testing and tracing, and the business community is responding, and then onto a vaccine, which is what the current market is booming about, and the business community will do that. So we need facts and figures and straight talk. What we will talk about in future episodes is what this new debt, right, is going to mean on the balance sheet of the Fed, what it's going to mean on the balance sheet of the federal deficit, what lack of dollars given to support New York and Long Island are going to look like from a household income because of enhanced taxes and everything else. Those are all really critical parts of our recovery. And so I think what we want to do, and certainly in this first webinar, we just wanted to give a broad overview of the challenges we have. And then what I think we want to do each week is find ways to start intelligently discussing and solving each one of these problems, because those dominoes that are going to fall are going to fall. It's not an if, it's a when. And I think the most important thing for us to do is figure out how to buffer and remediate those dominoes so that we don't have, because what I don't want to get to is go through all this pain, right? And then be right back to where we were in 2008, 2009, because the commercial market has completely collapsed and failed, right? That's where I'm hoping we can avoid as a country, but certainly on Long Island, get to, and I'm worried about that. I'm very worried about that because all of our commercial real estate was hurting to begin with.
Yep.
Pre-COVID,
yeah.
Okay? And now people don't need as much space. And now businesses aren't going to be restarting up again.
It's a very big issue.
What are these landlords going to do to get through that? And that's because they're the last ones holding this bag, right?
It's a very concerning situation because you're right. And, you think about landlords in commercial real estate, office buildings here in Melville and in your area. And what's going to, there's a lot of debt on those buildings. They're not paid for in full. And because of that, there's servicing that has to be done to that debt. And that servicing can only come from cash flow. So it's a big issue, and one that does weigh on me. And we'll see how we can sort of navigate these waters, but it's not going to be.
Yeah, I mean, that to me is where we have to work backwards from to make sure we don't get there. And that's a lot of hard work. And you used the term earlier, Peter, it's sacrifice. We all have to find ways to sacrifice. We all have to find ways to pay our people a little more and be a little more flexible with work hours and everything else, because we're in this together. People can say what they want. We are in this together, particularly this Long Island ecosystem. Long Island was built on networking and charitable events and all sorts of events. The economy was booming because of that, and now we have to recreate that all. We can't do that alone. We need to be
different, right, Joe? It's going to be a different ecosystem, and I think the winners are the ones that realize that and that are open to suggestions on how to best pivot to adapt to the new environment.
Yep. So if anybody has any questions, we want to keep these to about 40 minutes, 45 minutes. If anybody has any questions, they can just shoot a quick chat. We'd be happy to answer questions. Like I mentioned earlier, going forward, We're going to have these broken down somewhat into topics, so we can do a deeper dive on all of the all of the comings and goings of the economy, the job market, what Long Island trends are looking like. We're going to be highlighting some super cool businesses that are finding how to pivot and be able to be successful in the new the new economy. And we're going to have some elected officials on that we're going to want straight talk from as to how we're dealing with this debt and with the taxes and with the lack of services that we're going to be suffering here on Long Island. I mean, I think Peter and I, if nothing else, we're straight shooters, and we're not going to tolerate nonsense at this point. The stakes are too high. It's just too high. Our entire net worth is at stake right now, and we need to be focused, and we need to be fact-based, and we need to get real answers so that we can use our entrepreneurship to maneuver through this. And that is what's going to get us through this. I firmly believe in that.
Yeah, I agree, Joe. I think you're spot on there.
So we want to thank everyone. I tried to answer the questions as they came up. They were being sent to us. I tried to answer them as they came up. We're going to continue this every week. Hopefully folks got something out of this, and we look forward to talking to you all next week.
Yes, thank you.
Take care, everyone.
Stay healthy, everybody. Thanks, Joe.